Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Khing Oei, the founder and CEO of Treasury. Thanks for joining us in the studio.
Thanks for having me. Great to be here.
Can you tell us about your background, your journey to tech, Bitcoin, crypto, and ultimately to Treasury, which is a Bitcoin Treasury company?
Yeah, for sure. So I'm Dutch, grew up in Amsterdam, studied econometrics, and then started working in London for Goldman Sachs. And at Goldman, I was in the Special Situations Group, which is the distressed asset investing group, which I've done for most of my TradFi career. So first at Goldman, then at Fortress. I was at Halcyon, where I set up the European securitized credit business of a few billion. And then I ran my own fund for a while, 200 million European event-driven fund. And ended up returning capital at some point over the next cycle. And we're talking about the post-GFC sort of unlimited money printing timeframe, which actually was a tough time for distressed funds because there was zero interest rates. And that's when I got into crypto, actually. I got really, I got orange pilled in that period and got totally into Bitcoin. And I did a variety of things since then. In the last few years, I was at a large London-based hedge fund where I was basically involved in the crypto bankruptcies, mainly FTX. So with that fund, we became actually the largest creditor in FTX and in a few other cases. And the beauty of that period is that I got to meet a lot of great people in the space because we were actually the largest buyer of claims in these different situations. And that gave me also a great sort of network in the crypto space. So earlier this year, I saw the success of MetaPlanet last year on the back of obviously Microstrategy. And it to me seemed a very obvious opportunity to essentially build a European Bitcoin Treasury company. And as I was developing that idea, started looking at how to list, how to set it up, I started talking to people from my network in the space. And then got support fairly early from two great investors being Winklevoss Capital, i.e. Cameron and Tanya Winklevoss, and David Bailey Nakamoto, even before Nakamoto sort of became Nakamoto. So, and that sort of really got me going in terms of building out the idea and executing all the way to where we are now. So we announced a couple of weeks ago our transaction, which was it was the fundraise itself of about $150 million, again, anchored by Cameron Tyler and Nakamoto. We announced the reverse takeover with a Euronext Amsterdam listed company. And then we announced acquisition of Bitcoin Amsterdam as well, the conference. So that's, very exciting time for us.
Absolutely. I feel like there's so many different directions we can go on this, especially with we're recording on Tuesday and tomorrow is the unconference here in New York. I guess take it any direction, but I'll tee it up a little bit for you. How do you think about the operating business? How do you think about the conference as an asset? How do you think about the probably the most popular topic right now, mNAV, and what determines, is it sentiment? Is it something else around, book value versus trading above or below that? So yeah, there's at least three questions.
Yeah, no, absolutely. A key question right now. Start with the operating business. For us, it is super important, actually critical, to further and enhance the Bitcoin ecosystem. And that to me is actually core of a treasury company. And the fact that which is sort of your second question, the fact that we actually are owning the Bitcoin Amsterdam conference now is obviously fantastic synergy, right? The conference itself, it brings community together, it grows the community, it educates, it brings the best speakers in the world to Amsterdam together. So it's a real asset, which is a supernatural synergy to being a treasury company. And to me, you need an operating business, and then the treasury is obviously to buy Bitcoin. And the North Star of these businesses is to accumulate Bitcoin and to increase Bitcoin per share, right? That's what we always focus on. Mm-hmm. But to have that operating business in that life cycle as part of an integral part of that process is super important, right? Because in the end of the day, a Bitcoin treasury company, it's two things. It is really a capital markets business, and we can talk more about what that entails. but also it's really a business that needs to be out there and market itself and be part of the community and grow, et cetera, et cetera. And those really go hand in hand. It's a very strong flywheel, and the conference is a great asset for that. Now, moving on to mNAV, which is obviously very topical. I think, first of all, when I was actually raising money for this round, a lot of investors were asking me, what do you think of mNAVs, where they are, where's it going to go? And my answer actually at the time was, and still is, I think those very high mNAVs, whether it's 5 or 7 or 10 or 20, they're kind of unsustainable. And I don't think it's actually healthy, right? It's obviously a part of a cycle which is natural when you see a new asset class developing. But to me, it was always going to go to a steady state, which is in a way more realistic, because mNAV implies a certain Bitcoin yield, right? And if it's too high, it either means for those investors who buy in, let's say 5 mNAV, it either means Bitcoin has to go up a lot, or the company will have to keep trading at 5 times or higher and keep raising money at 5 times or higher. And that's a tall ask, right? It's actually very difficult to do.
Yeah.
So I think in the broadest sense, as a Bitcoin Treasury company, as a founder, CEO, you want to create shareholder value, which means that on average, shareholders should be making money with you. But again, if you trade at an unrealistically high multiple, people buy in there, that means that investors are going to lose money at that level. So I think that's sort of broader sense. Now they have come down, and I think, again, that's very natural. And I think what we're seeing now is the market has become much more disciplined and much more, I guess, picky in the way it assigns mNAVs. And again, I've been, portfolio manager for more than 20 years. So for me, the market, it's discipline of the market is absolutely critical, and the market is typically right. I think there's sort of 2 things we're seeing. On the one hand, some companies that are now trading below mNAV, I think some of them, the market sees a difficulty in these companies growing Bitcoin per share over time and being able to essentially grow out of this, right? And as you know, there's quite some reflexivity in it, because it's clearly easier to create Bitcoin yield if you trade at a high mNAV. But, the capital structure is not just equity, it's also debt and different convertibles and pref debt, et cetera. So if you're at a sort of situation where, because of either your size or your previous execution or other things, it's going to be at least deemed difficult to create Bitcoin yield to be, then the market is absolutely ruthless right now, right? So I think that's one set. And I think, secondly, I think there's some technicals, right? And we've seen this not just with Bitcoin Treasury, also with, some of the other coins, where the way that some of these pipes and reverse listings, they sort of unlock, right? In a way with shares being registered and there being a lot of liquidity in one go. I think there's some technicals that just give some of these companies with exiting shareholders, bad technicals, frankly, where your mNAV just temporarily just dips, right? And I think there's definitely a number of companies that are sort of, I would think, are good quality, can execute, can grow, can build big capital structures, et cetera. And those I think are more of a temporary nature, where you see sort of low mNAVs, right? And then I think over time, I think probably also because it is a new sector we're talking about, a lot of things are new, which is super exciting. I think the market will also, in a way, get better at sort of, really giving, in a way, arguably the right valuations to these companies. And that's sort of driven by, indeed, how successful these companies are in accumulating Bitcoin, increasing Bitcoin per share, being part of the ecosystem, being out there, what's the long-term vision, et cetera. So.
Got it. Speaking of so many companies being new, it's almost like there was strategy, and then 2, 3, 4 years later, a few more companies, Metaplanet you mentioned, Semler Scientific in particular, and now you have these like a tidal wave of Bitcoin Treasury companies. I had what's happened over the past, call it quarter, and maybe it's a little bit longer than that, described as what happened with strategy over the past 5 years has happened with the newer treasury companies over the past quarter. What would your reaction be to that? Would you agree with that statement, or is it more nuanced than that maybe?
No, it's definitely accelerated, right? It's almost typical crypto, right? Where they say it's like a year is a month is a week, etc. And I think in a way we've seen a bit with the ATs. I mean, what again was very exciting to me is the innovation in the capital market, right? The ATMs are a fairly new concept in itself. The way you sort of securitize Bitcoin with different parts of capital structure, and obviously the fact that you essentially use a corporate treasury to buy Bitcoin. And indeed, the market has sort of moved on very quickly. On the one hand, we've seen certainly clearly DAT starting in different other coins, right? And in my mind, some of them probably maybe don't have a reason to exist, right? And I think, again, I come from this distressed background. And when you see, a distressed company, like the bonds drop, you start looking at it as an analyst, the first question you always ask yourself, or you're being asked is, does this company have a reason to exist? And I find that in some of these cases, they just don't, right? So that's one thing that's been happening. And I think, again, the market's become much more disciplined and sort of kind of cutting that down in a way. I think on Bitcoin Treasury companies, again, it's now because things have moved so quickly and we've seen different shapes and forms. We've seen different markets, different regulations, what happens with different ways of, some markets you cannot do ATMs, some that don't have options markets, et cetera, et cetera. It's become now much more clear where things are going, I think. So that's probably, I agree with that acceleration in the time frame. And I think one interesting point is that, from my perspective, where I'm sitting, I feel that, especially in the US, the growth has been immense and very exciting, but also getting somewhat crowded probably, which we're not seeing in Europe, right? In Europe, there are clearly a number of Bitcoin Treasury companies, which is great for the ecosystem. But for instance, we're actually the first one looking to list on a main exchange, a primary exchange, which, you can buy from any app, any trading app in the world. You can always buy your next. If you can buy Royal Dutch Shell or Unilever, you can buy what will be our treasury company. Options market fully there, right? Very deep and liquid options market in Europe. ATMs at our disposal. All the tools that made Microstrategy extremely successful and the leader in the space, we have at our disposal, including a very big pref market, which we can chat about more. And that is sort of still a very much an untapped opportunity in Europe, because it's we're still fairly behind. If you think about what's happening in the US, it's been sort of an acceleration of MicroStrategy over the last 4.5 years. It almost feel like we're still in the first inning in Europe, to use a baseball analogy.
Yeah, no, definitely. How do you, when you say, maybe some of these other treasury companies that are not based on the asset of Bitcoin don't have a reason to exist, what do you see them doing maybe over the next 12 months? And my question kind of reminds me of a comment that I think Jeff Park made on X, to the effect of the smart ones. He said something to the effect of the smart ones will put some portion of their capital into Bitcoin.
Yeah.
And I remember over the past 12 months, probably even more recently, I don't remember Polkadot, and there was maybe one or two others that came out and said, hey, we're going to put a portion of our treasury into Bitcoin. And so just like remembering that and then seeing Jeff's comment, it's like, how do you see those playing out over the, I guess you call it near to medium term?
Yeah, I think it's an interesting point. I think on the one hand, what the market has shown is that it likes clarity on these Bitcoin Treasury companies. So again, if your operating business is too large relative to your Bitcoin Treasury, and it's not a good thing, right? People like clear the Bitcoin Treasury. You can calculate the mNAV and the NAV and mNAV, and that's really the vast majority of the value, right?
Yep.
If you then have a lot of other value that sort of distorts the picture, the market doesn't like that. And I think maybe one example is probably GameStop, where it was a bit sort of, I guess, confusing for the market to some extent. So I would say for a treasury company, a DAT that has a token where arguably, maybe there's not enough sort of a reason for it to exist, for that to start buying Bitcoin, I'm not sure that's really going to save it, to be honest, right? I think that it comes back to, is there proper, I guess, corporate governance and a management team and a board that want to do the right thing. And again, if the market, I keep going back to it, the market is very disciplined, and these treasury companies start trading at a discount to NAV, which is significant, then probably the right thing to do is to say, look, we tried, didn't work, fair game. What we should do now, the right thing is actually return capital to shareholders, right? What you then should do is liquidate the assets and buy back shares and essentially liquidate the company, right? And that's then accretive to shareholders, right? Because if you trade a discount to NAV, you got to close that discount, and that's really to sell assets and buy back shares. So if you fast forward a year, if indeed, unfortunately, there will be a couple that just don't have a reason to exist, the market doesn't like it, it doesn't really work, then that's hopefully the right thing to do. In that sense, I think what Bitcoin Treasury companies in their own right, as it is a sector in its own, I feel, right? I think because Bitcoin, it's a reserve asset, it's digital gold. It will only increase its importance in the global financial ecosystem. I think we can all sort of be very high conviction on that, and that means that the reason to exist question is an easy one to be answered, and it's more about execution and making sure it happens.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at The Win in Las Vegas, February 23rd through the 26th, 2026, for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. Do you think you'll see a mixture of companies navigating their way back up to NAV and above, and call it M&A, or what different tracks or eventualities do you think we'll see in the market?
Yeah, no, that's a super interesting question. I think on one hand, I think the good management teams will be able to independently, if you trade below NAV, there could be a variety of reasons which we discussed earlier. I think the good management teams can get back up and will trade above and again find their steady state, right?
Mhm.
And I'm 100% convinced about that. Especially the ones that are strong ecosystem players that do a lot for the ecosystem. There's this enormous flywheel that will keep going,
Mhm.
right? And this, by the way, all the discussion, everything we're discussing is all independent of Bitcoin price, right? We're kind of assuming Bitcoin is going to be here, which is great by itself, but obviously there's also a case where Bitcoin does go up to 50 or higher, and that will also change the whole meta again, right? But we never want to assume that. But for these companies, they can independently do that. I think for the ones that cannot, I think there will be consolidation opportunities. And I've obviously been a special sits and distressed investor for most of my career. So that's something that I personally am keeping an active eye on already. And I think there's also two ways to look at that, right? One is that if in a way a company trades below NAV, that's not great for shareholders. So if there's some sort of consolidation, M&A, or another way to make that discount go away, and for that to be a transaction, that is good for the shareholders because you solve an issue for them. I think the second part is that it's also good for the ecosystem because ultimately, if that company would decide to unwind, which may be the right thing for the shareholders, because then you just you close that gap independently.
Mhm.
If that's the only way out, then it does cause some selling pressure, right? Because it would mean selling Bitcoin to buy back shares, right? Essentially return capital to shareholders, which it's part of life. It's part of capital markets. It's a deep market, right? As we know, there's billions and billions of day trading, but it still would be better if those Bitcoins would end up in another treasury, I think.
Yeah.
And then obviously, if, for instance, Treasury would be the consolidator, that would be the third benefit because it would be overall good for Bitcoin per share growth for our shareholders. So it's sort of three wins if that happens, right?
Mhm.
Sort of shareholders of that company trading below NAV, the general ecosystem, and then also the shareholders of the consolidating company.
Can you walk us through the capital market, the regulatory environment, kind of all the details, soup to nuts of where you're operating and how you think through each part of the capital stack? I mean, there's certain companies like Strive that have come out and said, hey, we turned down all the deals to take on any sort of debt at this point. So I guess the question would be, how do you think about different debt instruments versus being able to launch preferred products? Is one better, than the other, and kind of walk us through the wide world of capital markets.
Yeah, sure. Yeah, absolutely. Now start with the regulatory environment, right? So we've announced the intention to list via reverse listing on Euronext Amsterdam. Obviously, a very well regulated exchange, great infrastructure, deep liquidity pools, options market, institutional buyer base. So that's a great part to be part of. There's also a real product market fit for investors to invest in treasury stock once listed, because for retail investors in Europe, it's actually quite the IBIT ETF falls out of the regulatory framework. So for instance, I cannot buy IBIT in my simple brokerage account in the Netherlands.
Okay.
So that's a real product market fit. We would be obviously offering a euro-based product. So, it's always a benefit to have your own currency. So that's on the one hand. On the retail side, a real product market fit. You can buy very easy in your trading account in a regulated fashion. Tax reporting is easy. You can buy Bitcoin exposure. And again, hopefully, if we do a good job, you outperform Bitcoin as well over time. So that's one. I think for institutional investors, it's also really beneficial. Institutional investors, and I've been a European portfolio manager with a European mandate, it's actually very difficult to get Bitcoin exposure because then obviously you cannot buy Microstrategy because it's not a European stock. You cannot buy the ETFs because it's not your job to buy passive products. And there's no other stock currently on a primary exchange. So actually you have no options. So this is a real opportunity then to get exposure. I think the other element there, if you for a moment take away the fact that a lot of these PMs would like Bitcoin exposure, is also that in Europe we have a big shortage of a high volatile stock, right? It's very much an old economy market. We don't have the Teslas or Nvidias, etc. in our markets. So if you look at the volatility, the top 10 most volatile stocks in Europe, their vol is 57%, 360-day vol. For S&P 500, it's 75%, right? So it's much more volatility. And again, as we know from Standard volatility, especially upward volatility is very positive. It's certainly an asset. So I think that in itself is a huge opportunity set. The most volatile stock in Europe of the Eurostock 600, which is the broadest exchange, its volatility is about 60%. So in S&P 500 is over 100%, right? So that's a real basically a shortage we have in Europe of volatile stocks. So that's a real product market fit that is there. So then moving on to the capital market side, right? How do we intend to build this? So again, coming from a credit background myself, very important to be able to withstand a downturn, right? To me, longevity is absolutely key. Our ambition is to become larger in Europe, become a very major player, which means you got to withstand time and cycles. And we know, Bitcoin can have violent cycles, right? So you got to make sure your capital structure can withstand that. So the leverage itself is very important, and the mix is very important. So if you think about convertibles, right? Obviously, that is again a big opportunity. European convertible market is actually larger than the U.S. market, but there's very little supply in Europe. So there's a big supply demand imbalance. So that's why offering a convertible product with a high vol stock behind it is super attractive for the European market. So that's we definitely want to enter that. Convertibles have maturity though. So if you're out of the money, if your conversion, if at the point of maturity, the stock price is below the conversion premium, you just got to repay the creditors, right? So that leads to a very, I would say, conservative convertible outstanding number, because you got to withstand an 80% downturn in Bitcoin price, because you got to sell Bitcoin to do that, right? Which is part of life. If you then move on to the pref securities market, so instantly enough, the pref securities market in Europe is very well developed, because all the banks always used to have prefs and insurance companies. It's about $360 billion in size, which is double the US market, which is 180. So that's a big opportunity set. And Europe in general is very fixed income focused, right? US has an equity mindset, and you can tell it anywhere, and Europe has a fixed income mindset. So a lot of the institutional investors, pension funds, insurance companies are 60% or more to fixed income, which is sort of the opposite in the US, which means they're always hungry for yield. So for a company like Treasury to be issuing pref securities is a super interesting proposition for investors. And again, it helps with the whole securitization of Bitcoin. And from that perspective, the beauty of prefs is they don't mature, but you have your annual coupon that you always got to pay. So you got to make sure that you, again, create enough cash flow, either through equity issuance or other ways, to be able to pay for that. So that's a fine balance. But certainly for us, start with the equity program, ATMs, make sure we build a sizable market cap. We can fast track for an options chain, and then we'll start building on the convert side and then the pref side. In the meantime, there's a good chance we'll do like a private convertible as well. But that build out is super important. And again, a very natural opportunity to do in the European markets.
Got it. What's your response to those that would say, on the way up, as the Bitcoin price is just making new all-time highs and everybody's excited, to maybe put some cash to the side for optionality to buy the stock back and not have to sell the Bitcoin during the downside volatility? Can you kind of walk us through like a cycle, and maybe it's 4 years, maybe it's 3 months, and nobody knows at this point?
Yeah, that's true. That's always a good question. So my natural instinct is that that's not a good idea, because I think there's a lot of reflexivity in general in the markets, right? I mean, Soros is always a big thing, so that's a given. But I think especially in this sector, there's a lot of reflexivity, right? And we spoke before, if your mNAV is 2, you're going to create Bitcoin yield naturally by issuing shares, because you sell them at twice the level of your Bitcoin, right? So it's very natural. And I think if you keep cash on the side, that one, I think the market may be somewhat confused because it almost implies that you expect the market to value you below NAV, because the only way that buying back shares is accretive if you trade below NAV, right? If you trade at 1.1, you should be buying back shares, or 1. It really has to be significantly below, including transaction costs. It has to be really like 0.7, 0.8 or something, right? So I think while it's always good, and again, coming from this stretch, you always want to sort of, you want to plan for different cycles. I think it's much more important to do it in a capital structure than in liquidity, right? Because if you think about a company, how do companies go bankrupt? It's either a crunch on liquidity, or it's a bloated capital structure that it can never repay. And I think you got to balance the two. Clearly, again, you always got to make sure you can repay your debt. But the liquidity, especially for a Bitcoin Treasury company, is a hot topic, because if you keep money on the side, clearly you got to plan for operating expenses, other things, some unplanned expenditures. But away from that, if you plan for buying back shares, it has to be significant, right? Otherwise, it doesn't make any dent on your capital structure. Mm-hmm. That really then prevents you from buying more Bitcoin itself. So I feel that reflexivity, by doing that, you may enter your own negative reflexivity. So I wouldn't do that. I would say that in a downturn, and if there is indeed volatility on your mNAV, and in a real downturn, it's the sector could be going through some tough times. That's given. Again, first of all, make sure that in anticipation of that, your capital structure is conservatively structured. That's super important. I think secondly, for instance, the round we did now, the one we announced of 150 million, it was founder led. I didn't use any investment bank or placement agent to do that. It was all my own network. I raised money for my own hedge fund. I built a $2.5 billion CLO program, which I raised. So fundraising, I've done it for years now, and it's part of life, and it's super important. And I'm quite confident that in a bad market, there's actually some really smart capital waiting to get involved, right? And I think in different ways, either attract net capital or partner up with that to make the ecosystem better and to create a stronger business, I think is actually I think that's going to be a big opportunity, frankly, for that. So yeah.
Got it. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin Treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. How do you think about potentially a treasury company, not necessarily specifically, but any treasury company using a line of credit to buy back shares? And are there other potential tools in the toolbox? And how do you think the market would kind of think about that and observe that and react to that? Because it's not keeping cash on the side, but it's like, oh, we have this line of credit, or whether a company had it or applied for one. How would you kind of think through that? Maybe just in a broad sense.
Yeah. No, again, first of all, we got to, in that scenario, assume that your shares would trade below NAV, mm-hmm. right? And debt by itself means you're not in a great position, right? As we always know, creditors are always waiting to give you money when you don't need it. So,
Yeah.
so I think to then get a line of credit is an attractive proposition, actually, right? If you then find creditors willing to say, look, we believe in you, we were happy to fund it, I think that actually may work. To be honest, right, you get into this situation where if you trade below NAV, you got to do something to get yourself out of the hole. And you got to, again, North Star is your shareholders, creating shareholder value, and clearly your shareholders are not happy if you trade below NAV. You got to find a way out. Getting a line of credit increases the risk of your capital structure, right? You lever up, right?
Mm-hmm. Mm-hmm.
But given the situation you're in, it may actually be the right thing to do for your shareholders, right? So it depends on many things, including the terms of the debt. But I would say that's my first take, right? If we were to trade below NAV, which can, I hope it doesn't, but it may happen. You never know. Then I would really try to find different ways to get ourselves out of that, because that's again the most important thing. And a line of credit could be it. Arguably, there may be circumstances where, to your earlier question, right, about having cash on the side, maybe it's good to have a line of credit for a rainy day, actually, right? In that regard, because line of credit, you pay some commitment fee, but it doesn't cost you that much. Yeah. That could be an attractive proposition, actually. So that's certainly something that's important in the toolkit.
Could be strategic.
Yeah, exactly. Strategic. So, but again, I've been on the other side of the table, so I think it's also something that is, some cases, not easy to get, to be very realistic, right? I think it depends a lot. You got to have a lot of then confidence and trust from creditors to make that, because it could be the kind of thing where you got to give up your whole collateral pool to get that. So, would
you ever think about pursuing a U.S. listing, or is the focus more on the home turf for now, or how do you think about the international markets where you see someone like Metaplanet almost trading 24 hours a day in different markets?
Yeah, I think that's one of the amazing things, right? Also, very much obviously digital assets where you could trade 24, almost 7 then. But no, obviously the US markets are the deepest and largest in the world, no question. So to be able to have a line into that is very attractive for a company wherever you are. Not just because of the 24 hours element, which is a bit less in Europe, but still it's attractive, but also just because it's a very deep opportunity. So we're certainly keeping an eye on that. And I think also the way that ATMs work, that's kind of an attractive position, right? Because ATMs are much wider, much broader placed here in the US than in Europe. So I like to think that in a way with Treasury, we can have the best of both worlds, right? We have, I think we've already shown access to the U.S. capital markets because the majority of our investors, certainly by dollar value, are U.S., right? But in as said earlier, Europe is an untapped opportunity. So we're giving access to U.S. investors to that. And to also do that in the public markets through U.S. listing is certainly something we'd keep a very close eye on. I think it makes a lot of sense to do that.
Awesome. I'll throw it over to you if you have any overarching thoughts, closing thoughts, and kind of bring us to a close. And obviously we'll have to stay in touch and follow your journey here.
Yeah, no, appreciate it. I would say the last thing is, what I think is so interesting of what especially Strategy has been doing lately is really securitizing Bitcoin, right? So you give every type of investor, every risk preference, a slice that they can invest in, right? Mm-hmm. If you want sort of levered exposure, hopefully outperforming Bitcoin, you go into equity. You want a bit of downside protection with the upside, you go into converts. You want to have, a very attractive yield, you go into pref somewhere, right? And I think that's actually amazing because it gives additional investment opportunities to a broad range of investors, and 2, it really brings new investors into Bitcoin, into the space. And that is just, a huge trend. And I'm a big believer that these Bitcoin treasuries, if executed well, can become very, very large players in their respective markets. And that it's still a big question mark, but a positive question mark, how this will develop. They become very important ecosystem players, right? And how that develops, how integral they become in their financial ecosystems is still to be seen. But there's no question that there's a ton of value in these Bitcoin treasury companies, which will then make the whole ecosystem better. So I'm very excited about that.
Definitely. Where can people find you and or the firm online?
Yeah, sure. So our website is treasury-btc.com. And then we have myself. I'm on X, Khing Oei, one word, and then also you find Treasury there. So, a few ways to find us.
Awesome. Thanks so much for your time today. Really appreciate it.
Great. Thanks, Tim. Really pleasure being here. Thank you.